good afternoon, good evening, people. Yeah, I can't say guys anymore because it misgenderizes people. But Pride Month is almost finished, so happy June, June 23. We are going into the final week of June, the final week of the first half of the year, the final week of Pride Month, and we get the big celebration on Thursday where Joe Biden and Donald Trump go at each other on primetime TV Thursday night. So, don't really have any quirky little clips that I'm going to throw in the video here because, as I shared with you, had the wedding party across next door, literally 40 yards away from where the office is. And the music was thumping from Friday 6 p.m. until Sunday 10 a.m. Yeah, so anyway, here we go. Green Week. 3 green weeks in a row. Boom, boom, boom. Friday, red close, just like we had planned. Highs of the month, 55.05 there on Thursday. Full moon, Friday. All of it coincides, all of it comes together. Bring you on here again just to go back and look. Last weekend, week ago today, sent you out the email, said Friday, June 21 closes red. On Thursday, same thing. SPX closes down tomorrow. What did you get? You got your red close. We didn't sell off, but we got our red close. And that was the focus for the entire week. And that trade, as you all know who took it, got you anywhere from 80% to 100% credit on that, meaning you risked 250, you got paid 250. Ended the day zero worthless because the call that I had thrown out there on Thursday was the 54.85, 54.80s, with the close having been a little bit after that. Bring you to that in a minute. 54.73. So all that you were expecting was a close below 54.73. Well, I am here to tell you now on Sunday, June 23, 4:19 in the afternoon over there on the East Coast, that on Friday, June 28th, this coming Friday, we will close the week red. We will close below where we open on Monday morning, both on the SPX and on the QQQ. So I already have two trades up here for you. On the QQQ, if you want to go and take that credit spread, what you're looking at is buying the 481 calls, selling the 480 calls, and getting yourself a better than 50-cent credit. You will need to close this trade at a penny, but this is the trade that you would be looking at if you were taking on with the QQQ. On the SPX, same similar situation. June 28th, Friday, buying the 54.70 calls, selling the 54.65 calls, because again, looking for a close on Friday below 54.64.62, below where we open up on Monday, even though we have two red closes in a row and we are programmed already to know that we are going to get a green close. They are going to close it green in order to end this streak of two red closes in a row, because that's what we have been programmed for the better part of 6 weeks since we had the April bottom, that is the way that this works. We get a green close because you don't get three red closes in a row. Regardless, that is where we're closing on Friday. We are closing the week red. We've had three green weeks in a row. I, again, am not calling that a red week, the week of May 20th, 24, where we closed down less than 1 point. And this streak has been going on since the April bottom, 49.53. So count how many weeks you want. That's where we're at. Over on the SPX credits, again, OPEX, we are closing red on Friday. So when September 20th comes around, guess what? On September 19th, you're getting into the trade that on September 20th, you are closing red on September 20th. And I bring you into a little bit of context here because on Monday, this Monday, right, it is going to be the 36th trading session on the SPX without a minus 1% intraday move. A lot of you are getting sick and tired of hearing about it. Like I shared before, back in December of 2019, prior to COVID, and fuck you, Dr. Fauci, the streak that you had at that point was 38. So you are coming very, very close into that territory of the longest consecutive streak of trading sessions without a minus 1% decline. And you are heading into the weakest week of the month of June, having just gotten through OPEX, having just passed the full moon, and going into the week coming after this, which is 4th of July week, where July 4th ends or happens. When is it? On Thursday. So next week, not this week that we're trading in now, June 28th, but next week, July 1, July 2, July 3, and July 5 are just fucking throw them in the garbage kind of days. You ain't getting nothing unless something from way outside in the world takes place. 3, 4, 5 complete waste of time looking at the market during those days. We're going to have Monday, we're going to have Tuesday, and that's it, regardless of any kind of data that's going to be on that day. So we've got 35 trading sessions under our belt without a minus 1% day. 5409 coincidentally is where it is for Monday. We're at 3, and I made sure that my count is correct. We're at 335 trading sessions without a minus 2% day. And to bring you into context to that, this goes back to 2016 into the January 2018 highs. Now, I don't have the actual starting point on this chart properly. I want to say from my memory that it started on 999, September 9th, 2016. That was when we got the 2% day. I don't know. I've got to go back through my data to track it. But this is coming off here where your Donald Trump wins back here in November of 2016, and your run going all through the year of 2017 into the end of January, where 9 days later, you had a minus 11% correction on the SPX. 9 days. So we are running into a big streak with that as well. And that needs to be brought into context because, again, QQQ is where we're going to be focusing all of the attention on because that is where everything is. It's in QQQ, and I'll go over that quickly as I can. And I have a video to share with you at the end of this from a colleague of mine, which explains to the dumbest of dumbest how this is the biggest pump and dump ever. Bigger than Cisco in 1999. Green Week closed up less than 1 point. Thank God we didn't waste a red week. 1, 2, 3, 4, 5, 6, 7, 8. 8 of the last 9 weeks have been green weeks on the QQQ since the blows over there in April, 413.07. 413.07, we've now run up to 480. 486.84. This has been a 17.86% run. And it's all because of what I'll share with you at the end of this video, how it's all conglomerated into literally one stock and a couple of its friends. So we had our minus 1% day last week, which was required because we were already going in with 12 trading sessions. So again, on the downside on the QQQ, I'll get to the charts in a minute. But like I say, we are closing the week June 28th on Friday, red below 480.18. Thus, that is why this trade is the one that's on the table. Buy the 481 calls, sell the 480 calls. You're getting a better than 100% return if you're getting anything better than 50 cents credit. And all you've got to do is literally either wait until Friday or wait until there's a dip to where we'll get to in a couple of minutes. IWM, very interesting here on IWM because IWM, for the better part of last week, no plus, no minus 1% days, and you traded just in this little 2-point range. Tiny little range over here on the IWM, but the good thing is you got a green week because you had 4 red weeks in a row going into that. Can't have that, just can't. So got that off the marker, got that green week in. Now heading into this week, we'll see what we get. So I've got a couple of things that I want to go over on here, but I'm going to go with the charts first before we get into that. QQQ 49.36, 443, the May 31 lows. Incredible, fucking sensational move on this. What are we looking at? Well, coincidentally, coming down to that 480 was just about enough that we could have, and again, wanted that green week last week. On this week being the week of June 28th, the target area that I would be looking at would be 471. I would have every intention that you are going to be getting a visit at 471. And as long as they are not breaking down below 460, 461, you have absolutely nothing to worry about on the QQQ. All that we're looking at the moment for now is to get that little bit of a retracement back below that 475. And here's your gap coming over there from June 11th, 471, 468. Again, as long as we hold above that 461.80, all this should be is a little bit of a dip. A nice 20% drop over on the QQQ, not unheard of, not expected, but that's where you're looking at for your range for now, for this week, is looking at a decline, 475, 471 being your breaking points to the downside. On the SPX, again, coming off of the May lows, 51.91, and looking up here at 55.05.53. Coincidentally, that little ABC right there, just missing it by 5 points. But it does look like a very clean 1, 2, 3, 4, 5. Thus, a red week that we are fully expecting to be this week, where the decline comes down to specifically 53.01, 53.02. Anything in this 53.27, 53.01 area, there is going to start to be some major concern for a lot of technical traders. But what we're expecting, 53.75, fill that gap. That gap, as you see, perfect little gap over there on June 11th from the CPI, right over there. Bring it on down into that gap. Anything below the Sweet Home Alabama right here, right on there at 53.30. 53.30, you remember going back a couple of weeks ago, kept saying, we do not break below 53.30. It does not happen. It's never going to happen. And we kept coming down to that 53.30. We had that one little dip there back in the middle of June, and boom, right off of it. So 53.30 is going to be the bottom for all intents and purposes for the course of this week. And when you look at 53.30 and you say, no fucking way we're going to get 53.30 this week. We're at 54.67. 53.30, that's 130 points. When you go back and you look at your data and you just look at what you've got going, last week was an 85-point week. The week prior, 120 points. The week prior, 140 points. 124, 85, 114, 97, 125. Now you look at your down weeks, your red weeks. 215, 112, 118. It's not out of the question getting that 53.30 down there. So that's the line that you are very clearly still going to have a lot of respect for in the event that we even get down below 5,400. So everything's on the table as far as that goes. And then you've got your VIX. VIX 1339. Again, we got it there on Friday. Got right to it. It was like, oh, yummy, yummy, yummy. Look at this. We got 1339. We're up above 1339. And then again, the Viagra wears off. Shit happens. We're looking and needing to see that plus 1410 this week. If and when that plus 1410 starts to show, then we can start to see some judgment as to how is it being produced? How are we getting this VIX 1410? Why are we getting this VIX 1410? What's taking place? What's moving around? You have a very, very scary, hang on, you have a very scary Japanese yen taking place over here right now. We are coming right up there to that 160.35. This is some scary ass shit. Looking at that 160.35. Zoom on out. I don't even know if I can get out there. But there's your 160.35 coming right over here back into the 1990s. Now, many of you might not remember what happened back in the 90s over there in Japan, but yeah, you had the Asian markets crash. You had everything going fucking crash over in Asia. But that's where we're at. We're up right up there at that 160. And man, oh man, oh man, bring that into context with the US dollar and what's taking place there. Because again, you're getting a lot of headline news, which ain't bullshitting you. Rates are going higher. And that is going to have a big effect over here on the dollar. But for the most part, over on the dollar, we've just been trending sideways for the better part of, what, call it 6 months. Came all the way up here back in April or in October where we got up to 107 when the market was selling off. Here we are pushing back up to 107 and the market is not selling off. Here's your move over here in April when the market was selling off in April. We're continuing to push up here and we're not getting any kind of reaction out of the market. And something that can help you see that, which a lot of guys are dissecting it, a lot of guys are looking at it right now in every way that they can. Here's the NASDAQ Composite Bullish Percentage Index. And behind it in the gray dotted line is the NASDAQ itself, the NASDAQ Composite. Bullish over here, going up as there was no change taking place. Nothing was bullish all from the beginning of the year, January, February, March, going into April. In April, you had your sell-off. Then you had your bounce, which was very clean and very obvious. And as we've gone into the month of June, you can see this incredible divergence where the bullish percentage index is just selling off, moving to the downside, but the NASDAQ Composite continues to move to the upside. And the reason for that is your weight. You come out and you look at your weight, for those of you that don't know. Microsoft, Apple, and NVIDIA. 810, 827, 869. 3 times 8, 24. You're looking at better than 25% of the QQQ. The QQQ is in 3 stocks. 100 stocks there, and you've got 25% of it is just those 3. Add in Amazon, add in Meta, you're looking at 35%. Throw in another, call it 5%, 6%, you're looking at 40% with Google involved in them. Throw in Netflix, another 2%, 42, whatever. Tesla, another 2%. You got 45% out of just those few random stocks right there, without including AMD. And you come over and you look at where you are as far as your cloud. Look at how overbought you are on your RSI 5. Again, pullback, very, very promising, very, very expected. How far it pulls back, that's the question, and why. Kept pounding the table and continue to pound the table. September, November, December, January. That's where you want to have your put positions on QQQ. Come over onto the McClellan oscillator on the SPX. This thing's been bearish as shit, but it doesn't make a difference. Ever since middle portion of May, it's just been bearish. It doesn't make a difference because everything is in those few little stocks. Come back again over here on the NASDAQ. Again, middle of May, selling down, been flat to bearish. Doesn't matter because everything is in those few little stocks right there. And that allows me to come in and show you here with NVIDIA, who is the one that everybody's had to follow. And while you may be tired over on social media of Haktua, we're all fucking tired of NVIDIA, and I'm sure a lot of you are as well. NVIDIA off of the April lows, or sorry, the February lows, trending there in that zone, and then come here off of April when they announce the stock split as we go into the sell off after we have the April bottom and just explode for almost 100%. And when you bring it out even further and look at this, no, that's too zoomed in. But the 2024 Open is down here at 49.30. And you can see here from as wide of a perspective as you want to look, you went nowhere since they invented AI. This was when they invented AI. They invented it, they created it out of nowhere over in May. AI's been around for 50 fucking years, 30 years, 40 years. Hang on. And from that creation of AI back in May, going into the better part of the start of the year, as you see here, all we did was trend around, trend around, trend around. And in the beginning of the year is where it all kicked off. And at the end of this video, you will have an understanding as to why all of this is taking place, how all of this is taking place. And very much like what happened over there on GameStop, and yes, the rumors are true. There are senior level designers over there at NVIDIA that are all quitting their jobs and retiring because they've made millions, which nobody was ready for, on all of their vested stock options. So why in the fuck would you stay at work? So that allows me over here with NVIDIA to bring you into the other components. Coming off of the March lows over here on Google, bang, 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 new all-time highs over here on Google in April. And from April onwards, we've just been trending water. We've never filled the earnings gap. You've just been trending water, and 172, 180, very, very tight range. Very little going on over there with Google. Come over onto Apple, and again, with Apple, everything looked absolutely fucking supercalifragilisticexpialidocious going in there after that move in June. And then they invented AI, which, again, everybody's just bashed the shit out of because you're not going to have it out in the public until October. And who's to say in October people even give a shit about it? Because there's a bigger thing happening in November. Anyway, 220.20, and now you're getting your roll down here onto 207. Apple this week, I'd expect Apple to be pressing on to that 200. Come over here to Meta. Meta, nothing. Absolutely nothing. Absolutely nothing. Nothing, nothing, nothing. Come on to a bigger, broader picture of Meta, and you see Apple's at its new all-time highs from earlier here in the year, back up to the retracement, having had their all-time highs back here in September 2021, and then their major sell-off, which was an absolute crater. How they come from 88 up here to 531, well, I can give you that answer pretty quickly, and that's because there's only two places that you can run ads for the elections. And there's going to be more money spent on the election this year than there ever has been in history. The only two places you can run ads are on Meta and Google because they own every fucking website and every advertising out there. So, yeah, Meta, can't touch it. I've always said that. Microsoft, here's your Microsoft looking at a zoomed in view, coming down here in the April lows. And then again with Microsoft, bang, bang, bang. Just ridiculousness. I got nothing for you on Microsoft. I absolutely hate Windows. I hated booting up my computer today and it telling me, please wait, configuring. I don't have any love for Microsoft to the upside. I don't have any love for Microsoft to the downside. For the better part of 30 days, just been on this steady incline coming off of that 404. Yes, a little retracement down back into the 440 area, 435, but QQQ is a much better place to be. Come over onto Tesla, and as you can see here on Tesla from a wider view, Tesla's just eating it. There's nothing there on Tesla. You're in such an enormously tight range on Tesla. There's nothing to do with Tesla. And come over onto Amazon. Amazon over here trading 184, 191, 184, 191, getting your dips down there to that 174, back on up. Again, Amazon being one of the bigger winners when AI is actually out there with Microsoft, with Apple, because they own the cloud. That's really where you're at with Amazon. And again, I don't see a short on Amazon. Amazon is not a place where you go and buy stuff. But then I bring you over here onto Netflix. And, this is pretty fucking amazing because AI is going to destroy Netflix. But here you go. Your all time highs back over here in November 2021. And then your incredibly sensational, better than 75% sell off. And here you are trending in your 1, 2, 3, 4, 5 move back to the upside. And yeah, possibly you could see Netflix break 700. You could see Netflix break up there into 723, 724. But I really don't see anything that is table pounding to say that you want to be involved in Netflix in any way, shape, or form, other than the fact that 665, that's as low as it should go for now. And I believe, oh yeah, that brings me over here to AMD. AMD, you got Nvidia pushing over here to new all-time highs, new all-time highs. Well, then why isn't AMD? Why is AMD over here in this bearish pattern with A, B, and your C looking down here, down in the 90s, back down here up to the October 2024 lows, 2023 lows, when Israel invaded Gaza, when all this shit started? Why? Huh? Maybe they should be doing the Ponzi scheme that Nvidia is doing. So again, that's over there with what you got with Nvidia, and I see absolutely no reason to be involved in Nvidia whatsoever when you have QQQ. So that lets me bring you into the closing of this, which is the Dow Jones. The Dow Jones over here looking at that nice little big A, B, and here's your C start. With this being the A, this being the B, but it's questionable. Could also be your 1, 2. We don't know yet. We don't know if this is your 1 and this is our 2. We don't know because of this 392 area. And how oversold it is, we could very easily rotate all of that QQQ into the Dow Jones as we head into earnings season, which starts up in a couple of weeks. Questionable. IWM, below the 50, below the 100, holding very decently above that 200-day moving average, and the minus 20% from the all-time highs being right down there, just below that 196.40 at 195.57. 4 red weeks in a row, got a green week last week. Again, I'd be suspicious that you're not seeing that 196, 194 area over the course of this week. And there again with the dollar, like I was sharing earlier, the dollar here coming off of your highs back over here in 2022 when the market bottomed, and all we've been doing is treading over here with the dollar. This high over here again being your October 2023 high, which was your October 2023 bottom over there in the markets. We're pushing up there into that 107 area, so it's very questionable. And then you look over here at TLT, having bottomed down there below that 88.78, treading water. And again, with rates undoubtedly due to go up, like it or not, going to be a very questionable few months coming forward. So again, these are your trades for the week that are ending on Friday, June 28th. Buy the 481 calls, sell the 480 calls over on the QQQ on the SPX, buying the 5470 calls, selling the 5465 calls. Because we've had 2 red days in a row and we're expecting a green day, I see absolutely no way in hell that you cannot get $3 credit or better. So enjoy yourselves, enjoy your weekend. Apologize for taking up too much of your time. I wish you all the best, and I will see you in the chat room tomorrow, and I'll have an email out for you prior to the opening bell. Peace.
There's been a lot of talk about how a reasonably large percentage of NVIDIA sales are coming from sales to startups. There's 2 sides that have been battling this out on YouTube and on Twitter. On the first side, you have the people that say this is normal course of business. Investment banks invest in a startup, and then the startup sends the money back to their core provider, and the whole thing is a big circle jerk called round tripping. And then you have the people who unfortunately are being labeled conspiracy theorists, but they're not conspiracy theorists. In fact, they're not only being called conspiracy theorists, they're being called randos, R-A-N-D-O, a pejorative term that basically says, well, they're not part of Wall Street, so their analysis doesn't matter. And it's very unfortunate because the randos, as they're being called, are actually describing the situation exactly as it is. Now, whether you want to invest in NVIDIA or invest in one of these startups, most of which are not publicly traded yet, some of them will make it to an IPO and some of them won't. But we're going to go through this whole thing. And I'm going to explain it to you because this argument that's going on Twitter and on YouTube between the people that say what NVIDIA is doing is perfectly legal, which is true, and the people that are being labeled conspiracy randos, which is a hilarious term if you think about it, conspiracy randos. Actually, the conspiracy randos are telling you the truth. You're just not listening. So everybody knows that the Mr. Yen brand is about the truth. I don't lie. I tell you the truth. I was a forensic accountant, for Christ's sake. I was the CFO of 3 different companies. I've been a day trader now for 11 years. So if I tell you something about the futures market, you should probably at least give it a listen. If I talk to you about accounting or banking, you probably should listen. I have experience in a wide variety of fields. And I'm tired of this argument that's causing all this furor on YouTube and Twitter about whether or not what NVIDIA is doing is manipulation. I'm going to break the whole transaction down for you. And then you can make up your own mind. Everything I'm about to tell you is true. Okay? Are you ready? Are you ready to roll? And I do want to say, because, one of the phrases that's associated with me is when I would go on these rants and I'd say, why do I got to do everything around here? This is one of those moments. Why do I got to do everything around here and explain fucking accounting to morons? Okay? So the people that are calling the other people conspiracy randos, you're fucking assholes. Because now I'm going to fucking explain the transactions to you, and then you can make up your own fucking mind. All right, here we go. Because there's a piece to this that you're all missing. Everybody says, well, let's just start with a statement and then we'll go back. Everybody says, why would an investment firm A put $450 million into cloud AI startup? We'll call that one CoreWeave. Why would this firm put $450 million into CoreWeave? Seems risky. Well, first of all, private equity is always risky. Second of all, if they can get through Series A, Series B, and Series C and go to an IPO, they'll get all their money back. But there's a third reason you morons are missing. Investment firm A, we'll call them, has 30 million shares of NVIDIA, you goddamn moron. For every $10 NVIDIA goes up, they make $300 million. If NVIDIA goes up $100, they make $3 billion. If NVIDIA goes up $1,000, they make $30 billion. Okay? They invest in this cloud startup, and we'll call this one CoreWeave. CoreWeave, for those that don't know, CoreWeave is building the Ferrari of AI hosting. It's not a minivan. If you need a minivan, you go to AWS, right? If you want the Ferrari, you go to CoreWeave. Because CoreWeave is betting that there's enough demand for the Ferrari that they can build, 25 hosting facilities or whatever the fuck they're doing. Okay, I'm not making a value judgment, but the people behind CoreWeave used to trade natural gas futures. Okay, great. I'm the greatest living Forex trader in the world. That doesn't qualify me to run a fucking AI company, but besides the point. Okay, so this firm, A, firm number one, invests $450 million in the first year and a half of CoreWeave startup, who people who are just simply hopping on the AI bandwagon, they used to be natural gas traders. And after that, they mined Ethereum. I guess that qualifies them to run an AI cloud hosting facility. Jesus Christ. But anyway, you say, well, why the fuck would they put $450 million into this firm? Because by doing so, this firm sends the money back to NVIDIA, and NVIDIA, follow my cursor, you know, I love to say follow my cursor, NVIDIA gets the money back from cloud startup, AI, which again, in this example, we're calling CoreWeave. Nothing against CoreWeave. They're building a Ferrari. We'll see if enough people want to use a Ferrari. I don't know. I'm just a day trader. How the fuck would I know? I would ask the same question of the management at CoreWeave. How the fuck would you know how many people want to use the Ferrari? You were fucking day traders in the natural gas futures market. But be that as it may, this bet could work. But this firm doesn't care. Don't you get it? They don't care. This firm right here, follow my cursor, right here. They put the $450 million in because it's helping NVIDIA blow out their earnings. And then the shares that they own in NVIDIA go up $300 and they make $90 billion. What the fuck do they care about the $450 million? They're helping NVIDIA hit their numbers, and then NVIDIA's stock skyrockets when they beat earnings, and this firm makes $10 billion. That's the part you're not getting. That's the part you're not fucking getting. You can talk about round tripping all you want. Okay? Investment firm one sends the money to these startups, and by the way, there's like 33 of them, and NVIDIA has invested in 33 different firms. I've only listed 6 here because I don't think we need to type, 33 lines. Just assume these are 33 different companies. Not only did investment firm 1, 2, 3, 4 invest in these 33 companies, so did NVIDIA. Why? Why would they do that? Well, because all these firms, wait for it, hold stock in NVIDIA. Collectively, they own 200 million shares of NVIDIA. For every $10 NVIDIA goes up, they make $2 billion. For every $100 NVIDIA goes up, they make $20 billion. For every $1,000 that NVIDIA goes up, they make $200 billion. So yes, it's round tripping, which is not illegal, by the way. These firms gave money to these firms who then sent the money back to NVIDIA. And then NVIDIA shipped the chips. Thereby, NVIDIA beat their earnings. Thereby, the stock went up $980 in the last fucking year. And these firms made tens of billions of dollars. So yes, it is a round trip. This firm, 1, 2, 3, 4, all different firms. Call them whatever you want. Bain, Carlyle, Blackstone, BlackRock, Magnetar, pick a company. They invested in these companies as startups, Series A, Series B, Series C. They also helped them get debt financing. But so did NVIDIA. Why? Because all this money goes back to NVIDIA, and NVIDIA then ships them chips and beats their numbers. Now you say, well, but all these investment firms could lose a lot of money on these 33 startups down here. Yeah, but they don't care. Because their bigger investment is in fucking NVIDIA. You goddamn morons. That's the game. That's the game. Don't you get it? It's all a circle jerk. They're all working in cohesion. That's the whole fucking point. God, why do I do everything around here? Now, I'm not saying that this robotics company that got all this money from investment firm 3 here, I'm not saying they're going to make it, not make it. I'm not making a pejorative judgment. But in most of these cases, these people aren't qualified to be the third assistant cocksucker at a Mongolian clusterfuck. They don't know anything about AI. It's the hot thing. So they did a startup. These guys pumped the money to them, who then sent the money back to NVIDIA. Follow my cursor. It's a game. You send the money to them, they buy more chips, and send the money back to NVIDIA. It's a funnel. And then NVIDIA stock soars when they beat earnings 3 times in a row like they have. And these guys right here, it's not that they don't care about these investments. What they care about more is that NVIDIA's stock price is going to go up, and they're going to make tens of billions of dollars. Collectively, the firms that are investing in AI, private equity, and investment banks on Wall Street, have over 200 million shares of NVIDIA. Let me say that again, 200 million shares. If NVIDIA goes up just $10, they make $2 billion. If NVIDIA goes up $100, they make $20 billion, which dwarfs the money that they invested in the startups. And of course, the startups send the money, follow my cursor, doink, 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 doink. They send the money back to NVIDIA. But what risk is the investment firm taking? Even if every one of these startups failed, it wouldn't fucking matter. As long as NVIDIA soars high enough and they dump their shares when the time comes, they've made hundreds of billions of dollars. Hundreds of billions of dollars. These guys right here. What risk do you really think these firms are taking in investing in these startups? Let me fucking break it down for you. They're not taking any fucking risk because they're invested in NVIDIA and they're helping NVIDIA hit their numbers. Why do I gotta explain this? It's basic fucking math. Oh, it just drives me crazy. These arguments on Twitter. Ah, my God, it's round tripping. Yeah, no shit. A second-year accounting student figured out that it's round tripping. But what's the real key? The real key is that the investment firms have shares in NVIDIA. That's why they're helping them. It's all a game. They all know each other. You know, this guy in this medical AI startup, which I'm not going to name, they don't know fucking jack shit about AI. Just like CoreWeave, when they started out, didn't know jack shit about hosting. I'm sure they've learned by now. They've hired the right people, and they seem to be building a good firm. I mean, it's a Ferrari. I don't know how many people in the end of the day are going to use the Ferrari. We'll find out when they go, because this is the one firm, CoreWeave here, they're going to make it to the IPO status. And that's good because these firms will get their money back. But the question is, do enough people want to use CoreWeave's Ferrari? That's the bet. They might be right. They might be wrong. How the fuck would I know? I'm a day trader. What I'm saying is that, fuck, I probably know more about AI than these fucking guys. But they got the money. They got the expertise. They hired the expertise, and they're building these host facilities, which are Ferraris. They're not minivans. See, there's two things in business. There's the minivan. In a minivan, you take your kids to soccer. You pick the other kid up from softball practice, and you go home, and then you go to the grocery store, and then on the way back, you pick up the kid when he's done the softball practice. And the other kid's at Bible class, and you pick them up at 8 p.m. You use your minivan to do that basic driving around. For the Ferrari, you wouldn't take a Ferrari and make 7 trips a day. You're not going to the Wawa in your Ferrari. You're taking the minivan. Well, CoreWeave didn't build a minivan. They built a Ferrari. And their bet is that enough people will need to use the Ferrari. They could be right. I don't know. They might be right. They might be wrong. But to the investment firms, it doesn't matter. Because they're helping NVIDIA hit their numbers. And then the stock that they have in NVIDIA is soaring, right? It's this piece that matters, not this piece, right? Follow my cursor. This piece is one relationship, but this is the key. If NVIDIA can ship enough chips and beat their earnings, these people make tens of billions of dollars. Even if every one of these fucking companies failed, it wouldn't matter. If you put 10, 12, 15, 20 billion into startups, but the shares that you own in NVIDIA, these firms, if their shares are up $700 a share, which they probably are, you're talking $100 billion, bro. What the fuck do they care about this 20 billion? And half of these will probably make it to the IPO state, and they'll get their money back anyway. CoreWeave will make it to the IPO status. They're knocking on the door of an IPO now. So when the IPO happens, all these investment firms that invested in CoreWeave will get their money back, but they don't really care about that. They care about the shares that they own in NVIDIA, which are soaring. They went from being rich to just being just stupid rich. These companies here. So is it round tripping? Of course. Round tripping is not illegal. It's not like it's done all the time, but we haven't, it's not like this is unprecedented. They send money to these guys who then send it back to NVIDIA. NVIDIA ships more shares, blows out earnings, and the investment firms, which are in the middle of this circle jerk, make $150 billion. I don't know how many of these 33 firms that NVIDIA and the investment firms pump money into are going to make it. First of all, probably only a third of them are going to make it to IPO status. And just because you make it to IPO status and you launch a publicly traded company doesn't mean you're going to make it. You might not. I mean, look at CoreWeave. CoreWeave, and we're using this as the CoreWeave example. Not that I'm picking on them, but they built a Ferrari. They didn't build a minivan. Do enough people want to use a Ferrari? I don't know. I guess we'll find out. The stock will go public. I don't know. It'll probably go at $70 a share or something, and then it'll soar to 500, and then maybe it'll stay there. It might not. Depends on if they can find enough customers that want to rent AI space off of their servers. Because it's not cheap. It could be as little as $2,200 a month. It could be as much as $200,000 a month. It depends on how many cores, how many GPU cores you want to rent. Not the least of which is that AMD has a chip that's actually faster than NVIDIA's H100. And now they have partners that are building cloud AI startups to compete with CoreWeave. And they have, companies like TensorWave and companies like that. So that's another problem for CoreWeave. There's other people that are doing the same thing using other chips. So how would I know if they're going to be able to execute this Ferrari plan? The minivan plan, think about Amazon Web Services, the hosting facilities. Think about you have a piece of software that does accounting, like NetLedger or something. Well, you have it hosted in the cloud and you pay a certain amount of money for that, but that's not a Ferrari. That's a minivan. It's basic blocking and tackling. What CoreWeave is building is a Ferrari, and their bet is that enough people will need the Ferrari. If you believe in that, then when CoreWeave goes public, and they will, buy the stock. If you believe that they can find enough customers that need the Ferrari, then you should buy the stock. If you don't believe it, then don't buy the stock. I don't give a fuck. But all the arguments about whether this is round tripping or not are silly. Of course it's round tripping. Even a second-year accounting student at fucking Villanova knows it's round tripping. It's all a funnel. The investment firms give the money to the startups, and the startups give it back to NVIDIA so they can ship more chips. It doesn't take a fucking rocket scientist to figure that out. The part that you're missing is the investment firms have a risk-free position because they own shares in NVIDIA. And if they can help NVIDIA hit their numbers, that's where the money is. This shit don't matter. This shit don't matter. They could all fail and it wouldn't matter. As long as NVIDIA's stock goes up, these guys win. And I'm hoping that this video will solve this argument that is lasting all over Twitter and YouTube. NVIDIA's round tripping. They're blah, blah, blah. Okay, well, yeah, no shit, they're round tripping. Jesus Christ, I'm a forensic accountant. I figured that out on, day 5. Try to catch up. But as an investor, what you need to decide, is this sustainable? And then if it is, buy NVIDIA. Or buy CoreWeave stock when they go public. I don't care. This phase of it, let's just uncheck this here and just think about this as a whole phase. This mania, is it sustainable? Because the only one of these companies right now that's public is NVIDIA. So you have to decide, do I want to buy NVIDIA or not buy NVIDIA? That's all. And eventually some of these startups, this robotics company, which I'm not naming, and the medical startup, which I'm not naming, if they make it to IPO status, then you can buy the shares and see if these guys who have heads full of dreams can actually execute a fucking business plan. Not a one of them in any of these companies. And I'm not picking on CoreWeave. Not a one of these motherfuckers knows anything about AI. They just hopped on the bandwagon because these guys said, hey, if you start an AI company, we got a bunch of money for you. And there's one of these companies where the guy used to be a plumber. I guess that qualifies him to run a fucking medical AI startup. Yeah. I was a plumber. I can do medical devices. We're going to put AI in there and do this, and it's going to touch the cloud and get more data and reconfigure the robotics and the medical equipment. Okay, because you fix toilets, that makes you qualified to fucking run an AI company. All right. We'll see how that works out. These firms were started. These firms down here were started because these firms, they all know each other, and these firms put the word out. We got some money for you, but you gotta jump on this AI thing, brother. So 33 companies get started in a period of 2.5 years. NVIDIA then comes along and invests in every one of them, thereby marrying them to their chip. You see, these companies aren't allowed to buy other people's chips. They're only allowed to buy NVIDIA's chips. That's why NVIDIA made the investment. There's clauses in the contract. They got to buy NVIDIA chips. Will all these companies make it to IPO status? No. Will the ones that make it to an IPO and go public be a good stock? In most cases, no. Every once in a while, you find a unicorn. The robotics company here, that could be a unicorn. CoreWeave could be a unicorn. The medical AI could be. It's hard. It's too far in the future. How the fuck would I know? I know about as much as the people that started these AI companies, which is to say nothing. But they hopped on the bandwagon at the right time, and sometimes you get lucky. But in the end of the day, these guys are not taking any risk. They could lose all their investments in these firms. As long as NVIDIA's shares continue to levitate, they made so much fucking money, I can't even explain it to you. They don't have 10 million shares in NVIDIA. They have hundreds of millions of shares in NVIDIA. Do that math. Every $10 it goes up, they're making $2 billion. Goes up 100, they make $20 billion. Goes up 1,000, they make $200 billion. You think they really fucking care whether these companies make it or not? I mean, they do because they'll get their money back, but that's not central to this whole scheme. What's central is that NVIDIA beat their earnings every quarter. And I hope I've explained this to you, and we finally settled this issue. Is it round tripping? Of course. Round tripping is not illegal. Will all these companies be great companies? No, most of them are going to be dog shit. Is there a unicorn in here, these 33? Remember, I've only listed 6, but there's 33. Is there a unicorn? Maybe. But it was done because of the AI hype. That's what caused these companies to come into creation. It was like, let me use an example for you to help you out. Back when the coffee thing started with Starbucks, I mean, Starbucks was a unicorn, the unicorn of all unicorns. If you were an early investor in Starbucks, you have a beach house, a boat, you got a house in Maine, got a house in the Seychelles. You're rich if you were involved in the startup of Starbucks. Well, here's the funny thing. After it looked like Starbucks was going to become a big thing, the amount of money that these investment firms were willing to put into coffee startups was unfucking believable. There were like 9 coffee franchises started. Because coffee was the big thing. Look at Starbucks. We need more of this. Yeah, most of them aren't around anymore. Starbucks is still here, and they're going to be here for a long time. They were the unicorn. The other coffee companies, I don't, they're not even here anymore. I think there's one, so I'm not going to name. But when Starbucks became big, these 4 investment firms, these 10 investment firms, they had a lot of money for coffee startups. That's the way it works. So now AI is the big thing. Magically, 33 new companies got launched, and NVIDIA put a little investment in every one and married these companies to themselves so that they would buy their H100 chips and then send the money back to them when they got the funding, right? These guys fund these guys who send the money back to this guy, who then ships more chips to these guys, thereby allowing this guy to hit his earnings numbers every quarter, and the stock soars, thereby helping these guys make $100 billion. I hope you get it now. I hope you get what I'm saying. Now, as far as CoreWeave, there's all kinds of controversy about this whole thing. Are they going to make it? Are they not going to make it? Listen, I'm a day trader. How the fuck would I know? You know, the guys that started the company were futures traders. I guess that qualifies them to run a fucking cloud hosting facility with 700 employees globally in 19 different countries, which is part of their vision. Yeah, I guess being a futures trader qualifies you to do all those fucking things. Well, what you do is you bring in expertise, which the founders of CoreWeave have done, and whether they can execute that plan, how the fuck would I know? I'm just a dumbass day trader. But now I've explained to you the whole scheme, and you can make your own decision whether or not to invest in NVIDIA. It's not my business. I'm not an investment advisor. I'm a dumbass day trader. I'm the king of fucking Forex trading. And I wouldn't say I'm top 100 in the S&P 500 futures, but I'm certainly top 1,000 traders in the world. That doesn't qualify me to run an AI shop. It doesn't qualify me to run a medical AI startup. It doesn't qualify me to run a software as a service. That's what SaaS means, by the way. Software as a service AI startup. I'm just a dumbass day trader. And most of the people that did these startups couldn't find their ass with a map and a fucking flashlight. But these guys don't care because they have investments in NVIDIA, and as long as the stock goes up, they're good. I hope that helps you. And I hope this perpetuates all over Twitter and YouTube, and you can all stop arguing. Oh, it's round tripping. Of course it's round tripping. Duh. What, did your mom hold your head over a gas pipe when you were a baby? Of course it's round tripping. That's not the point. The point is that these firms have investments in NVIDIA. As long as the stock goes up, this shit don't fucking matter. They can all fail because they already bought all the chips to help NVIDIA make their earnings. So if all these companies get swept away, nobody fucking cares. Because all these investment firms have shares in NVIDIA and they made $100 billion. Welcome to Wall Street, motherfuckers. Have a nice day. Don't hurt yourself.